Hello traders and welcome to yet another episode. So in today's episode, this is where I'm going to pour my heart to you, and I'll be talking about the top three forex trading mistakes and how you can be able to avoid them. So basically, I'm sharing these as being my mistakes that I made in my trading journey. Remember, this is my ninth year in the forex markets, and some of these mistakes, no, they are going to shock you, but some of them, they are just common mistakes that maybe some of the traders and maybe probably you listening to this video now, that you might realize that even you, maybe you are making these kind of mistakes. But the good thing, I'm explaining them and also what I did basically in terms of being able to overcome those mistakes. So what you need to understand is that every trader makes a mistake, especially in the beginning. So when you find yourself making mistakes, taking losses, please don't blame yourself. Please don't throw the towel. Note that this is ordinary, it's normal, and it happens to each and every beginner. So what I'm about to share are my top three secrets that really cost me a lot. And what I am intending with this video is that you learn from them so that you can be able to accelerate your growth. And the first mistake is over leveraging. Yes, I used to really over leverage all over risk. And the reason why you find nowadays, I really emphasize so much about risk because Forex trading is actually 80% psychology and 20% mechanics. So psychology entails about things to do with over leveraging, emotions, risk management, etc., etc. So I used to risk too much on a single trade because the moment I began, I was shown a spreadsheet. I began with a spreadsheet that I was introduced to how I can be able to compound $100 in 90 days and turn it into $1 million. So as I jumped into Forex, mine was basically I'd given myself 100 days. I compounded to $100 to $1 million, and I'm out of these Forex trading because I will have made $100. So $1 million, all right? I'll have made $1 million. So I have something that I can live on. I can invest that and do be able to live a good life. So with that, I ended up now risking over leveraging so that I can be able to achieve my goal within 90 days. But what happened instead, I ended up blowing so many accounts. I deposited those $100, traded them. The farthest I could go, maybe $500, and then all of a sudden, I blow out the account. So it led to a lot of quick wipeouts. So I was that kind of a person that I'm depositing only. So I'm not making any withdrawals. I'm just depositing, because I used to use a very high leverage, thinking that it will increase my profits. Little did I know that in forex trading, the higher the risk, the higher the profits, yes, and also the higher the losses, because the trade can either be a profitable trade or it can be a losing trade. So how do you avoid over leveraging? It's basically using the rule of thumb that do not risk more than 1 to 2% per trade. And if you're taking multiple trades at a time, make sure that the cumulative risk of your total open position does not exceed 2%. So it is also important to understand how leverage works, because the moment I understood how leverage works, then I was able to be in a position to avoid over leveraging. This is because the higher the leverage, then the bigger the room it gives you to use a bigger lot size. So I used to take the highest leverage, and this made me to open bigger positions and therefore violating my 1 to 2% risk. So the key thing when I came to understand how leverage works, right now leverage is not an issue for me, whether I'm using 1 is to 100 leverage, 1 is to 200 leverage, 1 is to 400 leverage, because what I usually maintain is the risk, right? So I make sure that I don't risk more than 2% per trade. And if I'm going to take multiple trades, then I make sure that I don't risk more than 2% the cumulative risk of all my running position. But most of the time, you rarely find me with more than one trade. I usually take one trade at a time. Once it hits my TP, well and good. Once it hits my stop loss, well and good. And then now I go on to the next trade. So mistake number two that I made is chasing trades. So I entered trades late due to FOMO, that is a fear of missing out. So I could maybe probably open the charts and then I see the market is really pushing on the downside, and therefore I jump in, even though the market had left the best point of entry. Because I don't want to be left out, I jump in, and the moment I jump in, sometimes I was lucky to make money. Other times, the moment I jump in, then the market reverses or retraces before selling, and of course, during that retracement, I'm in a drawdown, and because of over leveraging, you find that sometimes I cannot be able to sustain the retracements. Then the market goes and I end up losing a lot of money, or maybe probably even end up blowing my account. So I also used to getting out without confirmations. That is, if I take a trade, I don't have confirmations for me to be able to exit that trade. Let's say maybe probably it's a buy, and I'm targeting maybe or maybe probably I'm looking at maybe let's say even 100 pips, and then I tend to exit in those trades prematurely without the market reaching my point of target, or maybe probably without even the market showing me some signs of reversal. So I used to leave a lot of money on the table. Then these basically led to poor entries and losses, meaning that I'm taking trades late and also exiting trades prematurely, and that really costed me a lot. I really struggled with these guys. I honestly can tell you for sure, for sure. So I used to be that person. That I feared a lot to miss out on a setup. Okay, so how did I avoid it? I started being patient, practicing patience, and this means I started waiting for my setups. So if I mark my setup, even if the market misses my setup with 5 pips, then I don't take that trade until the market touched my setup. And one of the best ways that I did this is to use the limit order. So I mark at the place exactly where I know when the price comes to that level, higher chances that it's gonna give me a very high probability setup. And I set the limits orders there, and I wait for them to be activated. But now with time, I can be able to comfortably wait for the market to reach to my entry, and then now I'm able to execute the trade. If it doesn't reach my entry, even if it misses by 3 pips, 5 pips, I don't take that trade. I just leave it to go, and I wait for another high probability setup. And I also really followed my trading plan because uh, I had to come up with a very concrete trading plan that I use that I followed so that I can be able to avoid chasing trades. So what I did is that I was able to narrow down to one specific pair. And those who know me, mostly I do trade gold, and that really helped me in terms of not chasing so many currency pairs, looking for setup, etc, etc. So I was able to settle on one pair, and I was able to make sure that I have done my market analysis well. If I don't set pending orders, sometimes I used to do alerts via TradingView, and once the price reached that level, I was able to in a point of opening the charts and executing the trade manually. So it is important to have a trading plan and follow a trading plan. It is in vain to take some time to write a trading plan because time is money. You're consuming time to write that trading plan. So it is in vain for you taking time to write a trading plan and failing to follow that particular trading plan. So the other thing that I did is I accepted that I will miss trades, that not all the trades in the markets, not all the moves in the market that I'll be able to get. So whatever I got, then I was contented with that. And whatever I missed, I was okay with missing, because the moment you feel bad that you've missed a trade, then what happens is that you start now entering trades prematurely without confirmations. Okay, so it really helped me. And also in terms of exiting trades without confirmation, what I used to do, if I have a target of 100 pips, then if the market comes to maybe gives me half of my target, I used to take partials and then put my stop loss at break even, and then leave the other part of the market maybe to go to my target. And this is something I do even today. Those who follow me, they know that I usually do that. And it has really helped me to exit trades without confirmations. And in case the market does not reach my target, therefore I'm able to take partials and I have my stop loss at break even again, meaning that that is not a losing trade because I paid myself something and my stop loss is at break even, meaning that in case the market does not reach my target and reverses, then I have made something out of that particular trade. So mistake number three, it's really going to shock you because it's quite a very simple, maybe simple, silly mistake because every time you go into a Forex mentorship, this is something that you're told that the trade is your friend. So myself, I used to ignore the bigger picture. So I used to trade against the trend on lower time frames. And this is very dangerous because anytime that you're taking a trade, it's good to align yourself with the higher time frame. So you do a top-down market analysis. For me, I look at the weekly, the monthly, the weekly, and the daily to give me the trend. And then I go to the 4-hour time frame. I draw my order blocks. Then I go to the lower time frames, basically where I'm looking at the price, maybe giving me a change of character or a shift in market structure, and also to be able to minimize the risk. Okay, so not checking news, sentiments, or market context. So in case I open charts and I saw the price really tanking or maybe rallying, I used to jump into the trade. So I didn't check maybe the news, maybe probably if we have news in the next couple of minutes, or maybe the sentiment of the market, or maybe the market context by itself. Okay, so I had a lot of blind spots, which led to so many traps, whereby the market really used to trap me a lot. So how I avoided this, I always analyzed higher time frames. So I began to analyze higher time frames before I take the setups, and this helped me to align myself with the trend. So I started being aware of economic events. So it became a routine to me that anytime before I take a setup, I have to look at the Forex factory calendar to know whether there are high impact news. Right now, I have developed a routine whereby when I wake up early in the morning, the first thing I do is when I want to start trading, the first thing that I do is look at the Forex factory calendar or the economic calendar so that I can be aware of the high impact news that are coming that are likely, maybe probably to impact the currency or the asset that I'm going to trade. And therefore, I'm able to know the exact time when the news is coming and I'm able to plan myself accordingly. So then I was able to align myself with the market structure. And this, thanks God to ICT, because ICT really is a really concept that helps you to be able to understand the market structure. When we see the market taking out the previous highs, we know that the market is in an uptrend. When we see the market taking out the previous lows, we know that the market is in a downtrend. And therefore, with the idea of the order blocks, it allows me to wait for the price. Once it takes out a key major low or a key major high, I wait for the price to retrace either to a discount level for me to buy, or to a premium level for me to be able to sell. So it really helped me a lot in terms of being in a position to improve. So the bonus tip that I can give you here is journaling, because I know most of the traders, they really never journaled. For me, yes, I was journaling, but again, now with those mistakes that I did, even if I'm journaling, then it means I could not achieve much results. So if you're able to avoid those mistakes, and among other major mistakes, remember these ones I talked from my point of view, things that I've gone through, the mistakes that I've been able to make, and also be in a position that I can be able to to recognize my mistake and rectify on them or improve on them. So, but here is another thing, another key common mistake that most of the traders nowadays they don't do: journaling. All right. So you find right now we have so many lazy traders that they don't journal. If they are not lazy, then they are doing what we call over trading, because you can imagine you have about 10 trades that you have taken for a day and you want to journal those trades. So it becomes quite tiresome for you to journal 10 trades. So it's good to ensure that you record every trade you take. Okay, so make sure that you record every trade you take, record it in a journal. I have a very elaborate and informative video about journaling. Check the description of this video. I've shared the link there that will take you to the video that I did about journaling, so that you can be able to understand how to journal. Okay, so then it's good to review weekly for patterns. So make sure that you're not just journaling, but you're taking some time, especially at the end of the week, to be able to review your journal, because your journal will reveal key mistakes that you're making, so that you can be able to improve on those mistakes. And also it will show you your strength, and therefore you're able to capitalize on your strength. So also it's good to adjust a strategy based on the data. That is the data from the journal. Once you evaluate your journal, so it will show you maybe your winning rate, your losing rate. So if that strategy is not really doing good for quite some time, not just for 1 day, 2 days, but for quite some time is not giving you really the results that you need, then you can be able to adjust the strategy. Look for ways that you can be able to improve the probability. All on a case worse scenario, maybe then you can consider changing your strategy and using another strategy that is high probability. So in summary, make sure that you avoid over leveraging, make sure you avoid chasing trades, make sure you avoid trading without following the trend. So don't ignore the bigger picture, that is the trend. And you can use the monthly, the weekly, and the daily to give you the trend. And then you can look for your zones using the 4-hour time frame. Then you go to the lower time frame, like the 15 minutes time frame or 5 minutes time frame, depending on the asset that you're trading. And you're going there basically to look for a change of characters, shift in market structure, and also to lower your risk. And the bonus tip, which is very, very important, make sure that you are journaling your trade. Okay, make sure that you are journaling your trade, because if you're not journaling your trade, therefore you'll not be in a position to know the mistakes that you're doing. You'll not be in a position to know the repetitive mistakes that you're doing, and therefore that means that you are not in a point to be able to improve, because you don't know what you're supposed to improve on. Okay, so what you need to understand is that trading is a skill built through awareness and discipline. So like I always say, there is this Bible verse that says that work out on your own salvation with fear and trembling. So I've translated that into trading, and I usually say work out your own trading journey with the discipline and consistency. Okay, so don't look at what others are posting online. Don't look at maybe what the social media hype that is going there. Remember, this is your own journey. Okay, and also trading is not a sprint. Trading is a marathon. So with the time, you're going to achieve the consistency. With time, you're going to achieve the success that you need. And from me, I wish you all the best. I believe this video was informative in terms of trying to understand some of these mistakes. And I believe some of these mistakes, they are the mistakes that you can be able to relate with. And with this, I'll just only request you to like the video, share, comment, subscribe if you have not subscribed, because I'm going looking forward to releasing more content that is going to help you in terms of your trading. So thank you so much, and until the next episode, keep safe.